Greetings. Baby S&Ps drive Tesla's stock price towards 2,000 a share very quickly is our story for today. This is Greg for Tesla Fan Insight. Thanks for joining us. Wanted to shout out to our Patreon supporters as well as our subscribers. If you enjoy, please take time to like and subscribe. I chose to do another show that we're doing live today with the goal being to try to work out the Tesla craziness demons that are going on. Basically, what happened is that the stock price, as you know, is up another $100 this morning. It's our expectation that there's a green light all the way to about $2,200 a share for the stock. And so we expect this to be an amazing week. And the type of things happening here are unusual for every company. And so I just wanted to, get a chance probably on a daily basis to sort of go through what's happening, make sure we're using good strategic planning to optimize how much money is being made. And so expect us with regular shows, but also live to sort of cover this as it happens over the next week. So in particular, what I wanted to focus on today is I had this some crazy titles going, but in essence, there are these illegitimate children of the S&P, and those children are allowed to front run the actual S&P in order to set themselves up before the S&P arrives. And it's very profitable for the holders of those. So what all this comes from is the fact that there's this thing that's been happening where the stock price has been aggressively rising on no news. Or, the S&P news obviously coming in is a driver, but the issue was, why is the stock still rising, and do the hedge funds have enough money on their own to push the stock as it's being pushed? So there are several sort of pointers that come back from this that I was surprised by when I did research. I will admit that I avoid indices as well as mutual funds because I prefer to choose individual stocks and invest there. So I really, even though I understand who they are, what they are, Fidelity being the initial big dog on the block and how it all works, had no interest at all for a variety of reasons in messing with them. High fees, inability to sort of choose stocks that I like. There's a number of reasons why I've chosen to avoid, but it's a repository of cash for huge numbers of individuals who are not as interested in getting into the nitty-gritty of investing in those stocks. So as I did my research, several key points came up. The first was, you should be aware that what's going to happen is that if Tesla qualifies for the S&P with profitability, there will be a multi-day, maybe 4 or 5 day period after which S&P will announce that Tesla is in. And then there's a gap between when it's announced that they're in and when they're actually brought into the S&P. What happens during this gap is that all of a sudden, all the funds that are S&P sort of authorized, et cetera, are now allowed to purchase the stock to carry the weighting that's necessary for the S&P. So what's amazing to us is the fact that what's happened is that all of this makes sense. The reason the stock was up $150 Friday and is up against today is that there is someone from S&P who indicated that something like a 60% rise in the stock price is about where Tesla should be relative to its weighting in the S&P, and that's what's triggered this avalanche of rising values of the shares recently. So this is an interesting point, and we're going to be covering more as we get through the week. But the question that comes up is, well, what if, is there enough money out there to get her done? Okay, so in general, there's about $17 trillion that's associated with the S&P once, it's announced that you're in. Tesla gets its portion of that allocation in terms of people buying shares to actually weight it properly relative to the S&P. And so the 2200 number was sort of how that number kind of came up and works out for that situation. Now, an interesting thing is emerging, which is S&P has been so successful, so many investors, that instead of just the $17 trillion that are there, you have these entities that you have to call baby S&Ps. And the baby S&Ps, or illegitimate S&P children, kind of have this deal where there are all these folks to differentiate themselves have created S&P funds. And those funds are tweaked slightly away from the just S&P companies in order to provide theoretically better performance. So what we end up now then with is a situation where you could say, no big deal if this is $500 million, something like that, $1 billion, 500 billion or something. But it turns out that these illegitimate children, baby S&Ps, are running above 10 trillion, probably more like $15 trillion, almost equaling the amount of money that's actually inside the S&P. So now we have a very interesting situation because you have these people with huge amount of cash. And because they don't have to wait for the S&P to implement a very rule-based process for admittance, they can front-run the S&P to get in position prior to the full S&P coming aboard. And they're within the covenants what they've agreed to do for those investors that have invested in their funds. So this answers the question of how is it that Tesla stock price is going nuts like this prior to Tesla's earnings? And so basically we have a nice movement in the stock. It doesn't seem like the run is ending. I'm expecting the stock to cross $1,900 this week and head for the 2,200 after earnings next week. So there's no shortage of funds. We're seeing a lot of dip buying. Anytime the stock pulls back 20 or 30 points, there seem to be a lot of people who have capital who want to get in. And so you have this very interesting mix of what's going on right now, which is the hedge funds are making money as they buy in. You have front-running baby S&Ps that are going on. And you have a number of activities that are occurring here that are pretty amazing and stunning. So I kind of wanted to run you guys through this because the question is coming up is, where's the capital coming from to do this? And my biggest surprise from this, because I do not mess with the S&P as my own investing, was that you had $17 trillion in the S&P, and then you have these other funds that are mirroring it that represent probably $30 trillion that, because of the rules of how they're supposed to invest, they generally have avoided having anything to do with Tesla because it's not part of the S&P. But now they can, and they're making the most of their opportunity to do so prior to official entry. So the cake that we're baking here, I think, is really interesting, and it suggests that, it's hard for Tesla to run out of capital that will arrive because there are all these troops that are rolling in with their cash to set up so they can provide better performance than other members of the S&P, perhaps even more so than the official ones. So I think this is a really interesting one, and one of the questions that I want to throw out there to my viewers who have dealt with the S&P a lot, but I'm pretty confident I'm in this situation in terms of knowledge, but the amazing thing to me is if in fact they choose to run the stock all the way to 2,000 or 2,200, then the S&P approves Tesla. We now have a situation where it's entirely possible we're sitting here at $2,200 a share, and the run between announcement and entry to the S&P could be another 30% or so on the stock, which would be unbelievably mind-blowing. So we're going to do more research on this so we can answer this question of what happens. But I just want to say that I really think, part of the reason I'm doing this show right now is we're focused on adding value. And one of those values that we can add is to say, hey, let's identify information that's out there that we think is useful and bring you into the research process and the dialogue, because you guys are just as smart as I am, and we're happy to bring up the question, but we definitely want to give you an opportunity to leverage that information to benefit growth in your portfolio and income. And that's one of our core processes that we're doing here at Tesla Fan Insight and will continue to do. And so this is why you want to subscribe and like and support us on Patreon, because our goal is for you to do really, really well. And we're working hard to make that happen, hence the research that went behind this. So I'm fascinated here because I have what I call fact checkers in my show, and they will identify and nuclear my comment if I'm wrong. And so I'm happy to take you on if you feel as though the logic stream I presented does not fit fact. You know, on the other hand, I actually think what you should do is figure out how to get your cash lined up so you can participate in this bonanza, because I just think it's going to be awesome what happens. So for those of you who are Patreon supporters, I actually have an hour-long interview we did with an investment banker yesterday regarding how all this is going to play out. Our next show in this series is going to be the result of that interview. We're going to put some of the tape in and then possibly bring them on later in the week. But what we're going to do is create a file and upload it, and then give a pointer to those of you who are Patreon supporters so that you can hear the interview and get a feel more for what's going to happen, because I think you'll be impressed by some of the information shared. And we'll be expanding this, like I said, a daily series through the week, and we look forward to giving you some input there for that. I wanted to note that my eyesight is not the greatest, and my camera is a distance away because it's the iPhone. And so I'm actually sort of able to see your thanks and hellos, and I appreciate all of them. But we'll answer legitimate questions by reviewing what you said and just put those answers in, either do it in a show, the next show we do in this series, which will be tomorrow, or we'll do it by just responding to notes in comments below this show. So the thesis of this show is the fact that there are these things that I'm calling illegitimate babies of the S&P, and they're illegitimate because if they were legitimate, they would do the exact same thing that the S&P does, but without formalizing into that process. So because of their illegitimacy, they can actually take entities out if they feel like it. Horrible. So they can take people out. I apologize for the phone. We'll address it in the next show. I want to thank you all for taking time out to join us. We look forward to your comments. We look forward to like and subscribe. And we'll have another show rolling tomorrow on this, and we'll, through the week, heading into earnings, so we can address any questions that pop up and also add some interesting input that I think you'll find useful. This is Greg for Tesla Fan Insight. Let us know if you can't hear us. We're working on our mics, etc. And we look forward to any and all input. Thanks once again for joining. Have a great day, and bye for now.